is Avijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of February 16th, recording this on Sunday afternoon, February 22nd. NVIDIA's earnings is coming up on Wednesday, the February of 25th. We know it's a key barometer stock, the king of AI. It hugely influences the market, a big weight of both the NASDAQ 100 ETF QQQ as well as the S&P 500. It's a poster child of AI. Right now, a lot of the AI spending is related to the NVIDIA's GPUs. They dominate the AI infrastructure play. And as a result, it'll be interesting. The market is going to watch to see what are Jensen Huang, their CEO and founder's thoughts about the AI space, what kind of spending is being planned, and is their momentum continuing into the future. And keys beating Whisper numbers. And so we look at NVIDIA's chart, we look at the semiconductor ETF SMH, VanEck Semiconductor ETF. NVIDIA holds, of course, the biggest percentage of that. It's a big influencer on the semiconductor industry, and also a bigger part of the Magnificent 7 ETF, Roundhill Mag 7 ETF, Mag S. So we'll look at those two ETFs relative to what NVIDIA earnings can do to them. And the NASDAQ 100 ETF QQQ, it's been kind of, threatening to break down. Maybe it makes a recovery. So look at what the QQQ chart tells us. We look at some technical indicators, the bullish percent index of the NASDAQ 100 and BPNDX. We look at a market indicator of sentiment in terms of put-call ratios. This is the equity put-call ratio, CPCE. Look at two barometer indices we've talked about in the past. One is the Dow Jones Industrial. That's had a big breakout above 50,000. Can it reclaim 50,000? It fell below it, but it can reclaim 50,000 and climb towards the target that we talked before, above 53,400. And then crypto, Bitcoin, has had a massive pullback starting off from the 126,000 peak in early October to a recent low near 60,000. Since then has recovered towards the 70,000. It's kind of hovering around 67. And so what is the Bitcoin chart telling us? So without further ado, our charts are fund.substack.com. That's our blog site. Daily blogs come out. We appreciate you subscribing to it with your email, and when they come out, you'll get the blogs. Our YouTube site is also Charts Are Fun. We do believe charts are fun. We don't provide investment advice. We're not registered investment advisors. The goal is to share technical patterns, share your chart patterns, and hopefully if you like them and maybe use them towards the investment decisions is really our goal. The goal really is to share interesting and call it signals in the market. What is the market telling us with these various chart patterns? So going right into NVIDIA, this is the hourly chart of NVIDIA. And what we do see is a near-term cup and handle from 190 to 179, back to 190, kind of a shallow handle from there to 185, threatening to break above 190 this week. Will be key. Maybe ahead of earnings, it breaks out above 190, but we'll see what ends up happening after earnings. But if you look at that near term, 179 to 190, you're talking about close to 11 points. 190 to 11 points is 201. But if you take a slightly longer view on NVIDIA, their targets is actually higher than that. The hard target is, if you look at that 153, pull back to 86, back to 153, and then that breakout, 86 to 153, talking about $67. At 67 to 153, that's 220. So that's the eventual target of NVIDIA that it would climb to. And near term, if you look at that pullback to 169 up to 194, and that breakout above 194, if it does happen next week because of earnings, 169 to 194, you're talking about roughly $25. At 25 to 194, that's 119, between 119 and 219 and 220. So 219 to 220 is where NVIDIA's target is. And if you pan it out from here on the hourly chart, you could say in some ways a neckline at about 194, a pullback to 171. So that's roughly close to what, 171 to 194 is $23 or so. So 23 to 194, that also takes us to roughly 217 to 18. So that's pretty much 218 to 220. Anywhere in that level is where potentially NVIDIA could climb to, is for us to look at, and it'll be interesting to see what happens. Now, if you look at the RSI, it has pulled back, consolidated in the 50 region, kind of tested it twice, 169 and 171, and from there is about to starting to climb higher. MACD is beginning to have a bullish cross kind of a signal, the black crossing above the red and the histogram going above the center line. So these are signals. Next week's earnings will be key. If it does break down, it could be significantly lower because 212 to 169, you're talking about roughly $53. Subtract from 169, that puts us down all the way down to 116 or so. So that could be a big sell-off if that does happen. And that could be, bears would call it a head and shoulder kind of a pattern if that breakdown happens below 169. So probably not. We shall see what ends up happening, but we think that there's a good chance that the 218 to 220 target in NVIDIA could be met. Semiconductor holders, the VanEck Semiconductor ETF is also got an interesting pattern here with a cup and handle from 371 to 314 back to 374. 314 to 374 is $60. At 60 to 374, that's 434. So this cup and handle right here, a cup and then a handle and a breakout, measures to 434, but a more near term, there's a cup and handle between 420 and a 374 back to 420. You see that we got an upside about 1.18% on Friday. Volume was slightly higher than the previous day. MACD is getting ready for a bullish cross, and we can see RSI is now beginning to climb from the 50 towards the 70. That breakout of a 420 from a 174, you're talking about roughly $46 or so, 45, 46 bucks. 45, 46 to 420 is 465, 466. So that's an upside on NVIDIA if this momentum breakout comes on earnings. Magnificent 7 ETF, which is the Roundhill Magnificent 7 ETF, had a pullback, tested its 50-day moving average. As it tested it, RSI did not come down to a lower lows. Some bit of a positive divergence on RSI. RSI held 30. Since then, it's been climbing. MACD also getting ready for a bullish cross. That kind of upward move, it had a 1.64% move on Friday. See the volume much higher than the last 3 days. So ahead of the NVIDIA earnings, market seems to be getting bullishly prepared for some form of reversal play. Last week, we talked about software stocks being kind of hammered down 33% from a peak at $118 on the software ETF IGV. It had fallen down to 79. So that 33% pullback was almost like a bear market pullback in software stocks. Getting ready, kind of basing now in that 170 to 182 level, breaking higher, potentially climbing up to 195 is where we think software ETF that aligns with semiconductor rally, an NVIDIA-led Max 7 rally, and that brings us to QQQ. This has been a range-bound pattern. Two double tops at 636, but a double top can only be confirmed once we break below the value of the double top, which is at 580, 579 point. So until the breakdown below 580 comes, if that does come, we're going a lot lower. We're going towards 524. We've talked about that before. But if that doesn't, and this has held, see, notice that 594, 593, two double bottom test with better RSI, as in a higher low on RSI, that's positive divergence. So that breakout above 617 from a 594, you're talking about $23 added to 617, 640, a higher high than the 636. So that's a potential possibility. MACD is already getting ready for a bullish cross. The histogram is getting to go above the center zero line. RSI is climbing towards the key neutral line at 50. If it can break higher and go towards 70, we could see this breakout pan out. And this is a 50 period moving average in blue. It tested, didn't come quite test the 200, but came close to testing the 200. Since then has recovered. That's going to be key for us to watch this week. It all comes down to NVIDIA's earnings. Now, the other key indicator, a technical indicator that shows a bit of a pessimism and maybe a bullish momentum climbing is a higher low in the bullish percent index. That anyway goes to up to 9,500 when everything is bullish. All stocks in the NASDAQ 100 have bullish point and figure charts, and it can go down to zero. But in the most recent, in the tariff traded low, we got down to 22% of the NASDAQ 100 stocks were bullish, 78% had bearish charts. From there, it immediately snapped back up to above 80. Since then, printed two lows in the August timeframe and then in the November timeframe. And the present low that we just tested, by the way, a key event happened on February 6th, and we can see that in the NVIDIA's chart on that daily chart. You can see on, actually, this is the weekly chart, but if you look at NVIDIA's chart here, this big upward move that you saw, look at the hourly trade. Every candle it trade higher. Started at the low, ended the high. This is classic accumulation, a bullish accumulation, 7% move in NVIDIA from 170 to 193 with positive buying with high volume on every hour of that day. That kind of a bullish breakout usually means strong accumulation of smart money, preparing it for that bullish upward swing on the earnings to break out higher. So that poises well. And if you look at some of the other semiconductor ETF that also had a nice upward move, about 5% on that February 6th. So February 6th was the turning point in the market, and we can see that NVDA climbed higher, so did SMH, and we'll show you the Dow Jones Industrial Index also had a 1,200-point move that day. So February 6th was the turning point. Market, in this case, the semiconductor tested its rising 50-day moving average, held it nicely, and then came back strong, has since been climbing, potentially a cup and handle on the semiconductor. So now, if you look at the bullish percent, when that February 6th bottom came, look at where the BPNDX bottomed at a higher low than what it did back in November. So that is a bullish sign, potentially indicating that there were not as many NASDAQ 100 stocks that were not as bullish as it was in November. And this could indicate that perhaps as this BPNDX climbs, the NASDAQ 100 or QQQ could climb with it. Another indicator of bearish sentiment in the market, where there's been more put buying than call buying, is the put call ratio. This is the CBOE, which is the Chicago Board of Option Exchange. Their ratio of put to call, as we can see here recently from that early February low, is now climbing. That means pessimism is coming into the market. Market participants are becoming cautious. Usually that's a contrarian sign. When that falls, usually is when the market, when you start seeing a lot of optimism in the market, that's usually towards the peak in the market. And when this climbs higher and then to a point where it gets to an extreme, that's when the market is getting ready for a rally. So in this particular case, the fact that it is getting close to the April peak was at almost 0.7, above 0.69, and right now we're at 0.67, the put call ratio of the equity, CBOE equity put call ratios. The fact that we are kind of very quickly reversed from a 0.51 all the way to 0.67 in a span of just 3 weeks in February indicates pessimism climbing the market. In a contrarian way, that indicates potentially a lot of pessimism, people shifting off from puts into call as they're taken by surprise with the market moving higher. And it could mean that as this ratio comes down, the market kind of, contrary to the market players, goes higher with it. Dow Jones Industrial has an interesting pattern. That is a big 1,200-point move I talked about on February 6th. The same day, NVDA had a 7% move. Look at the big move higher, closed above the 50,000 psychological level. And look at when it did that, it had fairly good volume. That's the volume on that day when it rose 1,200 points. If you take it out to a weekly chart, this is a classic ascending triangle. At the 45,000 level is the resistance level. Pattern of higher lows. That breakout from 36.6 to a 45,000 is 8,400. Add 8,400 to 45, 53,400. That's the peak. We have not yet touched it. The highest we came was 50,500. We still got about 3,000 points above this level for us to reach the target. So there is upside left. That said, yes, you can see that the signal line is kind of hugging the red moving average line of the MACD. MACD is getting weaker and weaker. So if you do get that, it may not last as much. We from there could get a pullback. So it's possible that if the market from an NVIDIA earnings just sells off, then this would effectively break below the signal line in black would break below the red moving average line. The histogram would break below zero. In that case, we would have a pullback to test its rising 50-day moving average towards 46,000. So that's a possibility if that's what happens. And NVIDIA, remember, is a Dow Jones Industrial stock. In the top 30, it's one of the stocks. That's a possibility. But that said, right now, indicators are that this 53,400 will likely be met before we start seeing a real sell-off in the Dow Jones Industrial. Cryptos, on the other hand, on the daily chart, had a very sharp pullback on February 5th, almost touched the 60,000 on that next day on February 6th, and then intraday climbed 10% from 60 over to 68, 69,000. That 10 to 12% climb got it towards 72, pulled back to form higher low at 65, went to 70,000, almost 71,000 again, pulled back to test the 65 again, to double bottom test of the 65 with a higher bottom on the or higher low in the RSI. Positive divergence right there, positive divergence in MACD that is improving, picking up higher highs in MACD on the histogram of the zero center line, indicating that crypto Bitcoin is poised for breakout above the 72. A 60 to 72 is 12,000. At 12 to 72, that's 84,000 is where crypto could rise. Now, if you look at the weekly chart of crypto, this is a 5-wave pattern from a 15,000 low. 73 is wave 1, wave 2 pullback from 73 to 49, so that's the wave 2. Then the wave 3 climb from 49 to 109. Then the wave 4 pullback from 109 to 76. And then from there, the wave 5 climb from 76 to 126, the $50,000 kind of a wave 5 move. From there, a classic ABC correction, 126 to 80, 80 to 97.9 or 98,000 to a 60. So ABC correction played out. MACD, we can see, is kind of put a higher low on the histogram. And if that starts curving higher for the next few weeks, in the next couple of months, we could not be surprised to see Bitcoin go back and test that declining 50-period moving average. A counter trend move in Bitcoin towards the 99,000 cannot be ruled out. So that's a possibility. So in sum it up, NVIDIA earnings is key. It's going to be on Wednesday. Right now, this is potentially a breakout pattern panning out from 194 to 171, 171 to 194. We're talking about a $23,000 or $23. 23 to a 194 takes us towards the 217 or so. If you look at the weekly chart of NVIDIA, there is a pattern from 153 to 86 back to 153, $67 added to 153 takes us towards 220. And on the near term, the 169 to 194, that breakout, so that's two tests of the 169 and 171, and then that breakout above 194 from 169 to 194, we're talking about $25 added to 194. That's a 219. So 219 to 220 is where we think NVIDIA would be headed before it meets its target. Semiconductor ETF has two interesting patterns. SMH, a cup and handle from 371 to 314 to 374, $60 added to 374 takes us to 434, hasn't quite met it. Met 420, pull back to 374 to 420. So 374 to 420, we're talking about $46 added to 420. 466 or 465 is where this new cup and handle on the SMH could take us to. Magnificent 7, this is at the verge of the breakout, but nicely kind of tested support at its rising 200-period moving average. The fact that the 200-period moving average is rising indicates the trend is positive. Key is as the lower low came from 62 to 60, look at where the RSI was. It did not turn into a weaker RSI. RSI held the 30 levels. That's positive divergence. Key is where is 60? It's a key level of the 200-period moving average and also the 60 level that we see here from a resistance level. So that resistance now became support. It since then could be nicely poised to test its 50-period moving average, go back towards from 62 to a 65 or 66 level. From there, if it breaks higher, we can reclaim 68 and go up to a higher high towards 70. That's potentially possible for the Magnificent 7. QQQ has been range bound, call it a rectangle pattern. 636 has been the double top that we had in October. And then in January, from there, it tried to pull back, but didn't quite test that low. For a double top to confirm, it has to close a lower low below 580. It has not done it. It actually had a higher low from 580 at 594. The next low was slightly lower than the 594, but look at RSI was at a higher low. So positive divergence in RSI as the second low in 594 got tested in QQQ. That breakout above its 50 period from a 594 to a 617, we're talking about $23 added to 617. 640 is where the upside target is on this W-shaped double bottom. So that would take out the double top at 636, invalidate the double top, and QQQ could be back up running to new highs. Some of the indicators of where that QQQ rise could come is the bullish percent index is put a higher low from what it had in November. From there, that means it is right now at about 43 or 44. It closed near actually at 49 or so. This is the 10-day moving average, but it closed at 49, which means almost half of the stocks are still bullish on the NASDAQ 100. So if this climbs back higher, it potentially would mean that we would start seeing a market rally. Put call ratio is showing extreme pessimism, climbing up to almost the levels from where we had from April of 2025 when we had the the tariff flows of the market. That indicates that pessimism is there in the market could potentially fuel people covering those puts and converting into calls and causing the market to climb higher. And then Dow Jones Industrial had a beautiful move of 1,200 points, like successively closing above the 50,000 key strategic level. From there, it pulled back, but it's holding its 50-period moving average. A longer-term view on the Dow Jones shows a beautiful ascending triangle. That 36.6 to a 45 is 8,400. Added to 45 is 53,400. So that's the level where Dow Jones is headed. It didn't quite get there. It's within 3,000 points. It came to 50,500. So another 3,000 from the previous high is possible to get to that 53,400. Crypto Bitcoin is beautifully forming positive divergence as it's forming a nice base from 60 to 72, 12,000 added to 72 is a move up to 84. It would test the 50-day and slightly take that out. More from a longer term view, we see a 5-wave move from the 15 to 73, wave 1, wave 2 from 73 to 49, from 49 to 109, wave 3, then the wave 4 from 109 to this 2024 tariff low at 74, from there to 126, wave 5. So that's a 5-wave move, then a 3-wave correction move or corrective wave, subwave. So A, B, C, and in the ABC, we see a MACD forming a higher low on the histogram. As this turns higher and MACD starts moving higher, we wouldn't be surprised to see this make a counter trend rally and test that 50-period moving average at 99,000 is where we think crypto headed near term. With that, good luck investing. We'll talk to you next week. Thank you.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.